Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. Lots of news cooking today.
Yeah, you could say news or rumor.
All right, checking in on Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $36,645. The market sliding slightly. Bitcoin down about 4.5% over the past 24 hours. The CoinDesk Ether price ETX index is at 2610. ETH also in retreat about 6%. The DFX CoinDesk's DeFi index is making a few losses, about 8% now at 289 points. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so the Bank of England is voting to raise taxes about 25 basis points. No surprises there. The surprise is that there are a couple of dissenters that want to raise rates to even 50 basis points. Next up, we're going to hear from the ECB. But is that impacting markets at all, Lawrence?
No. I mean, we could try again. We had other issues involved, and as you saw, you remember I said yesterday, 40,000 was a key point, a key level of resistance. We never broke it, and now I think the market's exhausted in terms of Bitcoin for the time being. So I don't think they're really paying attention to ECB. Remember, Bitcoin is still denominated in US dollars. Primary trading pair is USD or USDT against Bitcoin. So that's, what goes on in Europe and in England isn't going to really have any effect on, it's going to have much of an effect, I should say. It's not as important.
And the world is watching what's going on in China tonight, right, Emily?
Yeah, so the long-awaited Beijing Olympics are finally here. At least for the crypto community, one of the things to watch out for is this is supposed to be the time when China's central bank digital currency kind of takes the international stage for the first time. It's supposed to be a means of payment for athletes, spectators, others. The problem is that there aren't really that many spectators and others because of COVID. So I think it's going to be a lot lower key than one would have expected, but I'm still curious to see this roll out of the CBDC.
Yeah,
it's really hard to have money spy on you if there aren't. It's really hard to have money spy on people when there aren't that many people using it. Just saying.
People are also looking at NFTs. In a recent earnings call, the president of Nintendo remained non-committal to the Metaverse, but investors are targeting Nintendo stock as an undervalued Metaverse play. Also, eyes on Facebook. The stock is plummeting over 20% on weak earnings. They missed expectations big time. And then there's a rumor floating on the internet that Meta, aka Facebook, is acquiring virtual Metaverse world, the Sandbox. Nothing official. It's unverified. But setting the record straight for us now is Sebastien Borget, COO and co-founder of the Sandbox. Welcome, Sebastien. Great to have you. So lots of speculation about a possible deal between Meta and the Sandbox. If true, that would be huge. Is it happening?
Well, the answer is no. It's a totally fake rumor, and I hope it will never be happening because we've been pushing this vision of creating a truly open metaverse, fully decentralized, owned by the users at the core. So I don't see any compatibility here with what we're doing, our vision to empower players and creators to own land, to own assets, to own their identity, and build this digital nation through Web3, through blockchain, through DAO, etc.
So just curious, where did the rumor come from? Is it just completely manufactured out of crypto Twitter, or do you have any idea why people have started saying this?
I have no clue, but truth is there's so many things happening in Sandbox every day now. Almost every hour you see new project, new partnership, people using our tool to create and empower their community. We announced last week the Warner Music group entering Sandbox, etc. So maybe people are fantasizing, but that's really not our dream here. We have a much bigger vision for the metaverse. I think we've been very vocal about it, and we hope to push that vision even further now.
What was interesting in the rumor mill is that people were then saying, oh, okay, if Meta acquires Sandbox, how would that happen? Can a company even acquire a decentralized metaverse?
That's actually a great question. And that would mean essentially that the company would need to acquire from every single token holder their NFTs, their currency, acquire the majority, if not the totality of the supply of the currency to really own it in a similar way that you own an equity-based company. And that's, I think it's something really difficult to achieve given here like the stakes.
So, you seem pretty critical of Facebook getting involved in the metaverse. I don't know if you got a chance to see Facebook's earning results and some of the losses that they've taken in this investment. What do you think? We've asked you this question before, but now that there's a little more data out there, what do you think they're doing right? What do you think they're doing wrong? Should other companies does it make sense for companies like Facebook to get in, or Meta, to get into the metaverse? What's your take now that we have this data?
I haven't looked at the result this morning, so this is fresh data I will need to check out. But I know intrinsically what they are doing wrong. Like they are pushing, thinking the metaverse is going to be a place that's going to be transactional for commerce. And they are keeping a mindset where like they want as a platform to control the ownership of the user identity, the data of their users and the digital content produced by their users. They went as far as saying like they are giving up on Libra, their cryptocurrency exploration project, and they are not giving any sign to look or embrace like true decentralized ownership, NFTs, and other decentralized contents. So that's, for me, it's like, I don't know, it's ignoring what's happening in the space, and it's ignoring like what technology is enabling towards building a better web, a web that's more community driven. This vision also of like building and not like they launched the avatar feature, but the avatar is still something very attached to your real world identity in Facebook. You still need your Facebook account to just enter an avatar. I think this is just wrong. Like you should just pick up a nickname, choose how you look like, and that's how you enter the metaverse.
Mm-hmm. I wonder if Meta or any entity, and this is a counter argument I've seen floating online, if they create a metaverse that offers quality games and free income-producing land, why would people want to use something like the Sandbox where you have to pay thousands of dollars for land?
Well, first of all, you do not need to pay anything to enter Sandbox. You can get started for free just from your avatar. You can actually experience other people's creation, and you can start earn revenue from spending your time. Like your time is actually being valued in Sandbox through play to earn, and your loyalty towards brand, towards creator is rewarded in the form of NFTs and tokens. And that's, again, something really new and very opposed to the model that Facebook is pushing toward a more transactional web 2.0. Then you have the opportunity in Sandbox to acquire true ownership properties that you can then operate, generate a revenue from, and build really fun, immersive experience full of culture that comes globally. And that's something that I haven't seen that much in the format that Facebook used. Like it seems pretty boring, everything I've seen so far in all the videos they released.
You're describing Minitel. It kind of reminds me of Minitel back in the day, in the 90s. Do you think that there's a model there of where things can kind of go wrong?
Plenty of things can go wrong, of course. Like if I knew the future ahead, etc. But I think like when you empower communities and the value goes back to those communities, like those creators can actually make things happen differently. And we've seen the network effect that Web3 has enabled to date through cryptocurrency, through NFTs, through all various initiatives, including DAOs, etc. And I'm confident as we are seeing the acceleration of Sandbox with all those brands coming in, all those builders joining the ecosystem, all those jobs being created, that we have all the right ingredients in hands to for the successful recipe.
Mm-hmm. Well, when you see other companies like Microsoft inking a deal with Activision, which is being reviewed by the FTC in the United States, and Nintendo being vague, flirting with the idea of metaverse. So what are your thoughts of this incoming onslaught of competition, potentially?
I think it's essentially showcasing like this space, this is virtual world, like they call themselves metaverse, but I don't believe they are. They are just like traditional virtual world, is going to be very geared toward entertainment. That's why some of the key actors are trying to secure major IPs that can draw in the players. And because their model is about locking users, they want to lock the users on their platform, trying to secure their position in the space. We want to take a very opposite approach, like embracing many IPs, welcoming them, mixing them, and allowing even the users to move from one decentralized world to another, allowing NFT to come and take life, being playful, etc. So I don't see that in a future where everyone gets accustomed to own their identity, own their asset, being able to transfer it somewhere else, use it somewhere else, and sell it anywhere else on the platform, that there is a future for locked platform where they can do that.
Interesting. And I understand, Sebastien, that Sandbox is giving out grants to folks who want to build in the Sandbox. So that's great news. And thank you for coming on and clearing the air for us on this rumor that's been developing. So Sandbox is not for sale unless you buy out every landholder, which I think would be tough. All right. That was Sebastien Borget, CEO of the Sandbox. All right. Coming up, heading over to El Salvador to talk about Bitcoinization and financial literacy with trading platform Paxful. Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wine.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching.
And you are watching.
And you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The International Monetary Fund is worried about the cryptoization of the developing world, this week warning that crypto market volatility is destabilizing capital flows in emerging markets. The Financial Times reporting the IMF is concerned that developing economies face immediate and acute risks as a result of their existing established currencies being replaced by crypto assets. They've repeatedly recommended that El Salvador stop using Bitcoin as legal tender. Joining us now is Ray Youssef, CEO of crypto trading platform Paxful. Hello there, Ray. Thank you for joining us. So you have big news. Paxful has opened La Casa del Bitcoin, also known as the Bitcoin Educational Center. You're providing free and accessible learning opportunities around Bitcoin. There's a couple of images there. Learning opportunities around Bitcoin and financial literacy. Contrary to the IMF, you think hyper-Bitcoinization is the idea that Bitcoin could become the default value system of the world is a good thing, that it would benefit millions and not millionaires. How do you see that playing out in El Salvador?
Well, there's a lot of work to do. I encourage everyone to go to El Salvador. To them, there's a lot of misunderstanding. A lot of people think that Bitcoin is an initiative by the government to associate Bitcoin with the Chivo wallet. The Chivo wallet is a wallet created by the government of El Salvador to propel and support Bitcoin, but it's independent of Bitcoin, and Bitcoin is independent of it. People don't realize that. Simple little things like that. People still don't realize that you can own a fraction of a Bitcoin. So there's a lot of work to do to educate. Bitcoin is something that is a lot bigger than El Salvador, and it has little to do with the president of El Salvador. And that's why we're there, because everything begins and ends with education.
Yeah. You have a bit of a spotty connection, but we'll continue on. I was hoping you could address the IMF's concerns. In many cases, people need money immediately to buy food, pay rent, fill basic needs. They need stable money to pay for those things. So how do you square that up with Bitcoin, where one day your $50 worth of Bitcoin can buy groceries and the next day it can't?
It's a great question. So Bitcoin is something that the narrative that we get about it is a speculative asset class. You can buy it and maybe you'll be rich if you hold it for 2 years. And it has actually worked out that way. But as a day-to-day tool, it is quite volatile, considering a lot of the manipulation that happens in crypto. But as a peer-to-peer platform is that the people of the world, the global south, especially the emerging markets, they use Bitcoin as a tool for remittances, for payments, and the price really doesn't matter because they're using it as a means of exchange. The people of El Salvador don't realize that yet. They're beginning to. And that's one of the reasons why we opened up the House of Bitcoin, to show people what Bitcoin's killer app really is. You don't have to be able to buy a cup of coffee or a papusa in the street for Bitcoin to be a success. It has tremendous value in allowing people to break out of the financial apartheid they find them. El Salvador doesn't have this problem much because it uses the US dollar. But for other countries that don't use US dollar, it's a tremendous problem that we in the West have a hard time even conceptualizing, unless, of course, we go and ask them ourselves.
If the issue is the convenience that digital assets provide, why not a stable coin? Why put them in, as Christine was asking, why put them in a situation where potentially they could end up one day not having money in a very short term when it's needed to buy those groceries, to pay for rent, to pay for whatever? And, you know, we in the West and richer countries can say, oh, well, this is the key to the future and everything. But if you have an empty stomach, do you really care whether or not this is the key to the future? If you need to pay for your bills and you can't because the price of your asset has fallen so much, so fast because of manipulation outside in other countries and other markets, the way that Bitcoin is being manipulated and traded in very sketchy ways every day and every night?
It's a valid concern. And if you talk to people on the streets of El Salvador, they'll actually echo that concern. So El Salvador uses the US dollar and have a problem with accessing other markets because it's the US dollar. It doesn't have a problem with volatility because they use the US dollar. But if you look at a country like Nigeria or Turkey, they have huge problems with wealth preservation. In the 1980s, 560 Naira would get you $1,000 US. Now, 5 Naira will get you $1 US, right? So El Salvador doesn't have these concerns, but there are other use cases of Bitcoin that the volatility really doesn't factor into. For example, if merchants in El Salvador want to be able to trade freely with other countries in Latin America, they could do so with Bitcoin as a means of exchange. It really doesn't factor in, at least only for maybe a half hour or so. And that is truly the actual power of Bitcoin, in that allows global markets to flow freely. It replaces SWIFT, where SWIFT is ineffectual.
But wouldn't a stablecoin do the same thing?
It actually would.
An asset-backed stablecoin or an algorithmic stablecoin?
Stablecoins actually do that very well. USDT has seen incredible success, especially in peer-to-peer markets. But Bitcoin is another animal entirely, in that Bitcoin has a resilience that USDT does not. Already you're seeing that USDT is being investigated. Now, of course, you could say maybe they could switch to USDT, but there's something special about Bitcoin, and our biggest markets are in Africa, where the people have taken tremendously to Bitcoin, while USDT and other stablecoins are available. The question is why? There's always the investment aspect of it, but again, your question holds. If someone is hungry on the street and they need money now, they're certainly not looking to it for the future, right? It has to solve problems for them right now. It's a valid concern, but Bitcoin can't solve every single problem for everyone all at once. This is a long-term play. The president of El Salvador is looking at the long haul, and the IMF is looking right back at him, and it's spreading. We have had tremendous interest from the Middle East and in Africa specifically about adopting a Bitcoin standard, and we're in talks with them as well. They don't use the US dollar, these countries, so it actually offers them tremendous benefits that it doesn't offer El Salvador, which really makes me respect President Bukele for bringing this into the picture. Bitcoin in El Salvador rolled out in the smoothest way possible. There were a lot of questions that people had, and there's a lot more education that needs to be done before people truly understand this. And that's why we built the first educational center, because everyone has the same questions that you're asking.
Ray, just zooming out of El Salvador for a moment, Paxful has some very unique insight into just global adoption that a lot of other companies don't have. And so earlier you were on the show and you said that Africa is leading the world in cryptocurrency adoption, which was like a really interesting stat. I guess one question is that still true? And are there other interesting just kind of global or regional trends that you've seen that we might not be aware of?
Africa is definitely leading. They continue to lead, and the lead is growing bigger and bigger every day. However, we're seeing something tremendous happen now in India. Bitcoin is now taxable by up to 30% each transaction. So you're seeing a lot of new energy happening in India around Bitcoin. It's not illegal anymore. And this happens every single day. Geopolitical events, domestic changes in policies, regulators opening their hearts and educating themselves about Bitcoin, things start to move and people start coming to Bitcoin. So peer-to-peer is really the best place to see how Bitcoin is affecting people in the real world, whereas centralized exchanges are not. For example, in every bull run, centralized exchange volume and business goes through the roof, while peer-to-peer volume remains steady. And when the bear market happens, everything collapses except peer-to-peer volume, which actually starts growing more and more and more, because it actually shows what's happening on the streets, honestly.
It's interesting that you mentioned India. We've talked about India a lot this week. So just putting aside that recent news, just from your experience or from your data, are you seeing cryptocurrency adoption in India growing? And is there a way to put it next, like how big is the Indian cryptocurrency market just in terms of the rest of the world? Any insights you have on this would be really interesting.
India is growing tremendously, absolutely. I mean, we saw our volumes more than double in India last year, and we weren't even really trying. India is over 1 billion people, and the Indian people are special beyond their numbers. They have a certain fire in them, which reminds me of Syrians, actually. So I think you're going to see an absolute explosion of cryptocurrency in India. Let's keep in mind that people in India, they use gold as a wealth preservation tool. Now they're starting to learn about Bitcoin, and it's becoming easier and easier to get Bitcoin, and now they can buy Bitcoin with their bank account. You're going to start seeing a mass shift in India, and it's going to start leading the world as well. It'll be right up there with Africa soon.
Mm-hmm. All right, Ray. Well, you're on the ground in emerging and developing economies around the world. So thank you for your insights. Appreciate you coming on the show. That was Paxful CEO Ray Youssef. Coming up, the IRS won't tax you on unsold tokens used for staking. More with CoinDesk's Nick Day and crypto markets update with Canadian trading platform Bitbuy.
Hey, I'm Isaiah Jackson, host of Community Crypto and author of Bitcoin in Black America. You're watching CoinDesk TV?
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So the IRS is not going to tax unsold staked cryptocurrencies as income. Where are we getting this information? What are the details?
Good morning. So yeah, that's definitely a headline that's been floating around for the last couple hours, but it's probably pretty misleading, to be honest. So the IRS offered a individual suing the agency a refund on taxes paid in 2019 for certain digital assets that were staked, Tezos coins that were generated through staking, but taxed as income. And the plaintiff sued because he believes that they should not be treated as income. They should be treated as property like all other digital assets and taxed as such and not taxed. Right now, there's a risk that they'd be taxed twice, both as income and property. So there's a lack of guidance here. Now, what happened was the judge in the case ordered the two parties to come to make a good faith attempt to settle the case, and the IRS very possibly is just going by that instruction when it offered a refund to the plaintiff. The plaintiff has rejected a refund or plans to reject the refund. And this is kind of being spun in the public as a policy shift, but the IRS hasn't actually indicated that it's going to make any effort at all to shift policy or, say that this is going to go beyond just this one-time settlement offer.
Okay, so it's not rejecting the refund, is it?
Right.
So I was going to ask, is the purpose of rejecting the refund primarily to do that? In other words, this was done to make a precedent to begin with, and that's why they're rejecting it, or is there any other reason why they're rejecting a refund?
No, it does look like what the plaintiff is hoping for is that by rejecting it, he can take the case to court, to trial, and hopefully secure a ruling that will be seen as precedent for future IRS cases. Now, one thing to note, the case is currently set to go to a bench trial in March 2023. So if that is the case, we're not going to see a resolution on this for well over a year.
All right, Nick, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Here's our live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at $36,628. Bitcoin sliding about 4.4% over the past 24 hours. The CoinDesk Ether price ETX index at 2609 ETH, also retreating about 6%. The DFX CoinDesk DeFi index down 289. That is a loss of about 8% over the past 24 hours. Joining us now to discuss the crypto markets is Michael Arbus, CEO of Canadian trading platform Bitbuy. Hello there, Michael. All right.
Good morning.
Quickly, just good morning. Off the bat, what is your crypto markets outlook? Seems to be that I don't know. It's in a bit of a range between 30 and 40.
Yeah, we're an exchange up in Canada, and so these opinions would not be that of the exchange and just my own personal view. When we look to digital assets, it's an allocation decision on the foremost. For every $100, you decide what you want to put towards it to make that disclaimer. Of that allocation you make into the asset class, clearly I have a view that Bitcoin is moving higher. Could start there.
Okay. So you're implementing Eventus Validus to surveillance trades on your trading platform. You're monitoring client trading behavior, identifying any potentially problematic activity that requires further investigation. What bad behavior would that look like?
Well, Bitbuy was Canada's first regulated marketplace. So similar to some of the changes you've seen on the regulatory frontiers occurring in the US right now, Canada was ahead in many respects, and we were the first to obtain that license. Part of obtaining the approvals to operate a marketplace was working with market surveillance software. So Eventus had a tool called Validus, which we had reviewed many tools out there, and part of our regulatory requirement was to manage and oversee all trades that run through our marketplace. So looking at things like spoofing, fictitious order placements, things that would be manipulative behavior on our ATS or on our marketplace. Eventus solution was superior, easy to install, easy for us to monitor from a compliance perspective, easy for us to report to our regulators when things don't look right, and for us to take immediate action and remove bad actors from our marketplace.
So, Michael, when you look out at other exchanges, do you think that we're seeing things get worse when it comes to the likes of spoofing and wash trading? We seem to have, it's always been a problem plaguing the crypto markets. And has it gotten worse as the market has gotten bigger?
It's quite easy to plug into multiple exchanges with the same commodity trading on hundreds of avenues. This is not something we saw in the equity markets. And the ease of entry into that world of automatically, programmatically watching your trade activity is much more simple in the crypto world. We have open API connections. Users can enter our marketplace through API and algorithmically trade through our marketplace. So as the market gets more depth and more volume, certain strategies are a lot more effective than when markets are thin. So yes, my view is that as market depth becomes to more maturity, you'll see a lot more algorithmic behavior occurring, in which case you'll see a lot more of the activity that may have been prevented and removed from equity markets that today is not really watched for in crypto markets. But that activity will decline as markets become regulated. Prior to us having to go through the gauntlet of regulation, it's not activity that we spent a lot of time thinking about, and now it's regulated and we must watch it.
Is there a geographic difference you find in terms of where the exchanges are located, is particularly centralized exchanges where they're located? Are you finding that there are questionable behaviors happening in certain either countries, jurisdictions, et cetera, where that happens more frequently than others?
Yeah, our perspective as Canada's largest or one of Canada's largest exchanges is that we need to watch the activity of tokens and currency coming into our platform. And as well, we need to have a view on where it's going when it leaves our platform. And we do our best to ensure that activity that's moving to less regulated markets is something that we steer away from. So we'll heavily monitor a user, for example, that might be sending their coins to a less regulated regime. I can only tell you this, that compared to 1 year ago before we went through the regulatory process, our behavior, our staffing that was dedicated towards compliance and things like Eventus' solution and Validus, those things were not things that were forefront and center. And as you can tell from some of the global exchanges and the behavior patterns you've seen, regulation is, the 2022 theme. And I can just tell you, as someone who sat on both sides of the fence, both deeply involved in crypto and in conventional equities for multiple decades, it's quite comforting to know that regulation is bringing great behavior, monitoring things like insurance over your hot wallets and extra insurance over your custody, reporting to regulators every single month with booklets of information and having them vet it to make sure that what you're doing is right, is all with user protection in mind.
Michael, just to wrap up, looking at the larger crypto market, I think, many people feel that 2022 has gotten off to a pretty lackluster start, hearing talk about a crypto winter, bear market. What is the main, in your view, of why we've sort of, the Bitcoin and other cryptocurrencies have sort of been in the doldrums, relatively speaking, early this year?
Yeah, we talk a lot about that too. So you'll see a global overall exchange activity in decline. So we spend a lot of time speaking about, well, why in this particular pullback why was there not an immediate inflow of fresh buying? And we've concluded here, based on our look at our data, is that you had an initial set of declines. You had people take their bet on what they call buying the dip. And now we're sitting in a situation where the linkage to conventional equity markets and things like the NASDAQ have never been more prominent given institutional adoption. So when you wake up in the morning and see the VIX at 22, Facebook off considerably, Spotify off, Google up, how do you make a decision, since that behavior of the overall markets is linked to that of the crypto markets today because of the institutional overlap? That's the theme that we talk about. Why do we think it's not going higher? I remember a story from 2008, 2009. I was sitting in a boardroom. The markets had just sold off on the subprime crisis significantly. I'm at a global bank. And it was the young poke folks saying, this will never come back. It's time to sell. And the 40-plus crowd at that time, who were considered aged, said, the one thing I know is that I'm involved in the stock markets and financial markets, and they will be higher by the time you retire. You have to have a view. And so my view personally, and that's why I've chosen a career in crypto, is that markets will move higher.
Mm-hmm. Silver linings. Michael, thank you so much for your insights. Appreciate coming on. That was Bitbuy CEO Michael Arbus. All right, let's check in with crypto Twitter for our tweet of the day. This one from value investor Mike Alfred tweeting, imagine putting your coins into something called a wormhole and expecting a good outcome. All right, this is in reference to blockchain bridge Wormhole, which suffered a possible exploit worth over $326 million. The popular bridge for connecting Ethereum, Solana, and more is attempting to negotiate on-chain with a hacker. In fact, minutes ago, they just tweeted, all funds have been restored and Wormhole is back up. So maybe, it worked.
This tweet is a lot funnier when you read out exactly what he said, but just saying.
You can read more on CoinDesk.com.
Yeah.
That's it for First Mover.
Family show.
Lawrence Guy's sense of humor. Emily Parker, thanks for joining us. And I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and all that Bitcoin at 3 o'clock. You're watching CoinDesk TV.